Welcome to FinScale, a podcast created by Solen Niederkorn, shedding light on innovation in finance, banking, and insurance.
Soaring across the wealth management landscape. Erik Podzuweit, CEO and co-founder of Scalable Capital.
And then we said, you know what? Let's meet for one weekend. We met in Berlin. That was the summer of 2014. This is a nice anecdote. You'll like it. So we met for one weekend and we had 3-4 business ideas that were on the final shortlist. And we said, we'll talk through all of them. Yeah, we won't go out partying. We'll just for 3 days, we'll discuss it.
Yeah.
And on Sunday night, we'll make the call what the final idea will be. Mm-hmm. And on Monday, everyone has to go back and quit their jobs. Yeah.
Wow.
If you don't quit on Monday, if you do not quit on Monday, you can't join.
In this episode, I speak to Erik, who lets us in on the great adventure he's having with Scalable Capital, which is soon to be one of the European leading digital investment platform. In 2014, he and his co-founders created this online wealth management firm in Germany. We learn about the evolution of their offering from their original positioning to the robo-advisor and recently their neobroker offering. Erik is a former banker at Goldman Sachs and shares a great anecdote about his success and how it all started. We find out why Scalable Capital joined forces with Baader Bank and what approvals they needed from Bafin and the Bundesbank. We also dive into how portfolio management evolved from the first risk-based management portfolio to the most recent ESG development. We also look at portfolio rebalancing as well as customers and the acquisition funnel. Erik walks us through their exponential growth, specifically the structure of their investment management arm. We touch on their partnerships with the major ETF providers, which have enabled them to offer Invesco, iShares, and Xtrackers ETF. This includes crypto ETPs and the integration of third-party providers such as Forceline. Finally, we talk about their cap table and more particularly BlackRock and Tencent, investors who deeply trust what they do. It's another must listen. Enjoy listening. Hi, everyone. Erik, thank you for being here and welcome to FinScale.
Yeah. Hi, Solen. Thanks for the invite. Really excited.
Yeah, and thank you to Marc, who made the introduction. So we'll talk about Scalable Capital, but before we start diving into your fintech, can you please present yourself?
Yes. So my name is Erik Podzuweit. I was born in Berlin. Then I grew up there. When I was 15, I moved to a small island in the Northern Sea. Yes, Germany has islands, close to the Netherlands, and lived there. Then I studied business, spent some time in the US, in Silicon Valley, and then I finished my business degree at the University of Warwick. That's an hour and a half north of London. And that's also where I started my first job. I joined in 2006, I joined Goldman Sachs on the trading floor in London at the old office in Fleet Street. So some of the bankers here will probably recognize that. In derivatives, the first team that I worked in was derivatives structuring and marketing. And then after 2 years, I moved to Frankfurt, or basically the company asked me whether I could move to a sales role and cover German banks, German wealth managers. So I worked for another 5 years at Goldman in Frankfurt. And after 7 years, I left and I joined the internet, so to speak. Not founding my own company, but first I joined as an employee. I joined West Wing Home and Living. They were also active in France back in the day. So
which
you can
area?
That's home and living. So basically sofas, nice decoration. So from basically derivatives onto the shiny part of the world. So everything that you can use to decorate your home with. And I did that for a bit over a year. And then I decided, together with a couple of former colleagues from Goldman, we decided to found Scalable Capital and do our own thing, basically combining internet and finance.
And was it during a dinner? How did you get the idea?
That's a good question. So the idea actually So we had already for some time we were 3 founders back then. That was in 2014 already. Yeah? So we were discussing a couple of ideas. Yeah. So I was already at Westwing and the other guys, they were still at Goldman. And we were in a life situation that probably is best described as wantrepreneur. Yeah. So you want to become an entrepreneur, but you don't really do it. Yeah. So you just sit down together at dinner and have nice beers, and then you discuss how you can conquer the world. But the next morning, it's also quite nice to go back, have a paid job, have a paid vacation, and all of that. Yeah.
I see.
Yeah. So we were in this wantrepreneur stadium. And then at one point we said, hey, enough is enough. We have to do this now. Otherwise, we'll never do it. If you stay too long, 7 years at Goldman is already quite long. If you stay too long, life gets too comfortable, and then you'll never do it. Because as you know, you started your own business. You go from having a nice salary to zero, and having to pay everything yourself.
You get it.
And so, you can't do this too late. And then we said, you know what, let's meet for one weekend. We met in Berlin. That was the summer of 2014. This is a nice anecdote. You'll like it. So we met for one weekend and we had 3-4 business ideas that were on the final shortlist. And we said, we'll talk through all of them. Yeah, we won't go out partying. We'll just for 3 days, we'll discuss it.
Yeah.
And on Sunday night, we'll make the call what the final idea will be.
Mm-hmm.
And on Monday, everyone has to go back and quit their jobs. Yeah.
Wow.
If you don't quit on Monday, if you do not quit on Monday, you can't join.
Wow.
You can't join.
And who joined? Who joined?
Everyone did.
Cool.
Everyone did. Yeah. I mean, it was quite tough. Yeah. I didn't sleep that well during the night, but you have to do this. You have to point the pistol to your own chest, and otherwise you'll never do it. Yeah. So we didn't have funding at that time. We just had an idea.
And what was the idea?
So the idea was, so maybe I'll quickly jump into that. So what does Scalable do? We have basically 2 business lines. One is online wealth management or robo-advisory, where we put together ETF portfolios and we manage them. So people don't have to select the ETFs themselves. We put them together, manage the ETF portfolios for our clients. We do that. And the other business, that was the business idea, basically an automated wealth manager. Yeah,
Mm-hmm.
That's the business idea that we started with. And the latest business line, we added this 2.5 years ago, is a neobroker. So basically, you can buy and trade stocks, ETFs, funds, crypto. But you have to decide for yourself what you want. And what's so new at these brokers? What's different from a normal broker? One is the usability. Everything is focused very much on your smartphone.
Mm-hmm.
And the second one is it's cheaper. A normal trade, still at most banks, to buy an Amazon share usually costs 10 or 20 euros still at most banks.
Yeah,
and at a neobroker, it costs €1.
Yeah.
So it's much cheaper. So that's what we did. And company has now from 3 people grown to 500. And we have 11 billion of client money on the platform, over 600,000 clients across Europe. We are in 6 countries in Europe. Yay! So it's been quite a ride. Yeah?
I make applause. Wow, it's amazing. So as I told you before we record, this is a business I know quite well because I've been advising one of my clients on this specifically. So the creation of an investment firm. In the beginning, it's complicated because you need to find different companies to support you, like a bank to execute your orders, have a license. So can you please explain to us how it happened for you? Because you started in Germany, you didn't expand in Europe in the beginning. And you started with what exactly? What was the product in the beginning?
Yeah, so absolutely right. Yeah, we started in Germany. That's the core market, or the Germany and Austria, so the German-speaking countries. And this year we only expanded into other countries. But we started in Germany, and you described it absolutely right. So for what we do is for the wealth management part and also for the brokerage part, you need to be regulated pretty much in every European country. And we got a authorization from the Bafin, the German regulator. Mm-hmm. And the Bafin and also the Bundesbank regulates us. And we basically have the allowance to advise people. We have the allowance to do wealth management, discretionary wealth management. and also for the brokerage business. Yeah. So we are fully regulated as a financial institution. We're not a bank. Yeah. So we are not client money and the client assets. They have to sit with a banking partner. I'll describe in a second who that is. And also we can't enter the credit business. Mm-mm. Yeah. We have plans together with our banking partner of doing that, but this is how it's separated right now. And the good thing is obviously that within the European Union, you can use passporting to passport your business, your German license into every country really in Europe. Yeah. And that's also what we have done. So clients who join us from France, from Italy, from Spain, we run everything of our German booking center. So all the booking of the trades, everything done, the trade execution is done in Germany. Mm-hmm. But we have customized the app, the desktop versions. We've customized it. There are specialized tax reportings for different countries because every country in Europe has a different capital gains tax law. Yeah. In France, it's different than in Italy, and it's different than in Germany. So you have to customize that. And obviously everything around that. Yeah. Local customer support, staff, if people have questions, and yeah.
And how did you select and why did you select Baader Bank? So Baader Bank is your bank, is it correct? Yeah?
Yeah, so we have, exactly. So the banking partner that we use in Germany is Baader Bank. So who is Baader Bank? Most people won't know Baader Bank because they are not a bank who are active outside of the B2B world. Yeah, so they specialize in banking as a service. Yeah, so they have a lot of wealth management clients. So wealth managers who say, you know what, I have my own wealth management practice with, 1,000 clients, a couple of hundred of millions of AUM. Mm-hmm. And I don't want to go to one of the bigger banks because they're not flexible enough. It's just tech projects take too long. Mm-hmm. So they have a specialized platform that onboards these kind of B2B clients. And they also do market making. They're actually one of the biggest ETF market makers in Germany, and also stock market making. So you can also get your trades executed via them. Yeah, that's why we chose them. Yeah, and they're around already since the 70s. Yeah, so they have quite a long history.
Okay, excellent, perfect. So they were used to clients such as Scalable Capital. So it was not new to them.
I mean, we were new in a sense because we were purely digital. Yeah. So they were used to other brokerage clients, they were used to other wealth management clients. So the business, per se, of managing other people's money, that wasn't new to them. But when we approached them and said, hey, we want to enter this business, we want to onboard the clients purely digital. Yeah, there will be no branch, there will be no advisor. Everything is done via the app or the desktop. That was quite new to them, actually. Yeah. And so we were their first. Now they have a couple of digital players on their platform. Yeah. But we were actually the first ones.
And did you launch because you have the possibility to make deposit at €1? Was it the case when you launched the platform?
No, in the beginning we started at €10,000. Mm-hmm. Yeah, because we first wanted to, obviously, we had 0 clients, and the goal was not to go from 0 to 1 million client immediately, but to get the first 1,000 clients and the first 10,000 clients, test the systems. Mm-hmm. Also, in the beginning, the company was much smaller. As I said, now we have 500 people. In the beginning, we were just a handful of people, and I was the only one talking to clients. So every client request via email, via telephone, I had to pick up, I had to respond.
Excellent.
While building the company.
It's the best. It's the best to do this. So you know your clients.
It's really the best. It's the best. It was quite stressful, but you have immediate feedback. So in the beginning, we started, the hurdle was 10,000, and then we lowered it. We lowered it to 5, and then 5,000, and then to 1,000. Now we lowered it to, you can start with €1 trading or €1 ETF savings plan. So now it's really, all barriers are gone. So now it's really the full democratization of finance, so to speak. Yeah.
And you said in the beginning that you started with the robo-advisor. Is it correct? Yes. If I listen correctly. Okay, good. And then, how did you organize the rebalancing of portfolios? And is it still the same organization today?
So I'll describe it. It changed. Yeah. So in the beginning, we had one investment model. Yeah. And so it was a purely quantitative investment model. So basically, it probably takes an hour to describe it in every detail. I'll make it super brief. It was a model a risk management model. So behind every portfolio, there's a certain risk budget attached to it. Yeah. So basically, clients choose their risk budget, And then the model selected a broadly diversified ETF portfolio. Usually we had 10 to 12 ETFs in every portfolio across different asset classes. I mean, stocks and fixed income and commodities. And then the balancing didn't happen purely static on a 60-40 basis. For example, I know you have 60-40 stocks, and if you deviate, the model automatically rebalances. Rather, it was risk managed. Yeah. So if there was low risk in the market, the model measured the risk, measured volatility and the shortfalls and value at risks and all of that. And if there was very little risk in the market, the model increased the equity proportion. If the risks in the market, the swings, the insecurity, the volatility increased, the model would push down the equity part of the portfolio automatically. But everything was done completely algorithmic based, so to speak. We obviously had a team monitoring it, we had a team programming it, but everything was done without an active portfolio manager.
So it's a risk-based approach.
Completely risk-based, and that's how we started, and that's really what we did for the first couple of years. And now we have more and more investment models. So now because we became bigger, just like every asset manager, probably start with one strategy, but then you broaden out a little bit. So now we have strategies that if people want their portfolio managed with an ESG flavor, so they want a sustainable portfolio, there is a strategy for that picks certain ETFs which adhere to SRI ESG standards. Then there are other portfolios. You want a portfolio with risk parity, a la Ray Dalio style, you can have that as well. You want a portfolio with a certain inflation hedge, gold, inflation-linked bonds in there, you can choose that. So you have, I think now it's 7 or 8 strategies you can choose from.
Okay. And is it a strategy that you developed internally or these models that you took from, because you have specialized, and I'm thinking of one specific person who has created a fintech specialized in risk models. Is it something that you developed internally or you took services of an external provider?
No, we didn't buy models also or have an external manager. That's also a possibility. You can ask, someone else, Goldman, and they run the models for you. We went for our own model, but obviously it's a lot of these models, they are based on the same, let me say, the same statistical groundwork that has happened. So obviously, yes, it was developed internally, but a lot of these models, they have the same foundation if you really look at the empirical evidence that they use or the academic papers that go into them. So that was quite similar.
Cool. So now how does it look like, your company? How many people? So you said like 500 people are working?
500,
Wow.
Yeah. It's a lot. I mean, I always joke, today is actually our year end, our Christmas party. And each year I joke because a couple of years ago, I said, I hope we'll never have 100 people, because my goal was never to have a company with a lot of people, because usually that creates processes and work, and we wanted to be quite lean and scalable, And I always joked, hopefully we'll never have 100 people, because then we won't be scalable anymore. We have to change the name. Now we are 500 people, and I'll say, so I changed it a little bit. I added a 0. I say, hopefully we'll never be 1,000 people.
So let's talk in 2 years.
Let's talk in 2 years.
Okay, and what is the proportion of portfolio managers versus a risk manager marketing?
So in that sense, we are a proper fintech company. So really fin and finance and tech. Half of the people, so half of these 500 people, or close to 500, I think we have 470 right now, they are working in engineering and product. So they are really coding and designing and really working on the technology front. Then obviously we have client support and marketing and headquarter roles like finance and compliance and all of that. They make up a certain portion. The portfolio managers per se are not that many. I think in the capital markets team and portfolio management team, I would say nine people.
Okay.
So that's quite lean, because that scales really
efficient.
super well. Because
if we have banks listening, I think they are amazed.
But once you set it up, quite frankly, you need a setup. It doesn't matter for 100 million, because that's real money for real people. You need a good setup. And it doesn't matter if you manage 100 million or 1 billion or 10 billion. It's just
true.
more money. You don't need that many more people to do it, actually. And
who are your clients?
So who are our clients? Our clients, we always describe them as, and let me just add to that, because we now talked on the wealth management part.
Yeah.
Of these 11 billion, we have 4 billion is in wealth management, and 7 billion is in the brokerage business. So the brokerage business is actually much bigger and also has been growing much quicker lately. Yeah. What was the question? Sorry, no, forgot your question.
No, I interrupted you. You were describing your team, and then I interrupted you, and then you were telling me that you wanted to specify, because you've been increasing your trading capacities. Potentially, you have a lot of traders.
Okay. Yeah. So basically, for the brokerage business, you don't need traders at all, actually. Obviously, you need operations people who monitor it, but everything is automated. So people want to buy Amazon, they click on the button, it goes automatically through the exchanges. Yeah, we are connected to 2 exchanges. People can choose where they get their trades executed, and everything happens automatically. So this actually scales quite nicely.
Yeah. And I was thinking of your typical client using. So you have a different range of clients.
Yes. So typical client. Sorry, that was the question. Typical client is, we call them smart, busy professionals. Yeah. Basically, people like you and me. Yeah. They have a good. They're not necessarily rich. Yeah. I don't know. Maybe you are rich, but
billionaire.
Hopefully I will be rich one day, and not just on paper, but in real. But they're not necessarily rich, but they have a good education and they have a good job, And for them, investing is not something super odd or super fancy. It's just part of their daily setup, They have whatever. When they order a taxi, they order it via app, and when they want their money managed, they don't go into a banking branch. They set up their own ETF or stocks portfolio. They want everything super easy, super low cost. And so usually these are quite well-educated people. A lot of them have studied business or engineering, computer science. So this is typically, on the average age is 36 years. Yeah, so not super young, like only school kids trading GameStop up and down. That's not the case, but also not old. So right in a very good working age. And so that's the smart, busy professionals. That probably best describes them.
And what is a typical sales funnel?
Typical sales channel. So 50% of our clients come to us organically, because it's in the core market, in the new markets in France. So we are quite new there. We have to make more advertisements so people know us. But in our core market, Germany, people know us already, And there it's 50% is already organic. So they hear us, from a friend, they've seen us somewhere, but then they decide one day, I need to do something with if they think about investing and they think about Scalable, and they go directly into the app store, download the app. So this is about half of them. And the other is really distributed mainly across other digital channels. So obviously the big guys like Google and Facebook, we pay big bills to them, because that's just what you need. And especially in the Google universe, you advertise on YouTube and stuff like. We work also a lot with partners. So with partners where, for example, sometimes with corporations. In Germany, we have a cooperation with Siemens. So the big 200-year-old technology company. They advertise us not to their clients, but to their employees.
Okay.
They have 200,000 employees, and they say, hey, if you want to invest privately with Scalable, then here's a good offer. And we have a couple of those partnerships, but there's no magic trick, really. It's really across the board. You do a bit of online advertisement. Sometimes we even do TV or radio. Sometimes we even do a bit of out of home. I go on podcasts like this or YouTube channels, and just everything.
Excellent.
We don't do sports marketing yet. So we are not on any sport jerseys yet.
Not yet.
Not yet. And no stadium is named after us. I think
not yet.
Once you do this, exactly. Once you do this, it's a bit of the kiss of death. Once you stay.
Okay, so you have a lot of ETFs, funds, and stocks available on your platform. How do you select them? Because I have seen prime partners such as Invesco, iShares, or Xtrackers. And how did you find them? Why did you select those providers? And for the stocks, same question.
Yeah. So, maybe start with the stocks. There, it's quite easy. We want to have all the stocks on there, so we don't pre-select them. So I think right now we have 7,000 or 8,000 stocks. If there's a stock missing, people can write us an email and we'll ask the exchanges, because all of our order flow goes through exchanges. We'll ask the exchange to list them. Yeah. But so it's you can find pretty much every European, US, or even from emerging markets, every European stock you can, every stock you can find. Yeah. So 7,000. We have 2,000 ETFs. So all the ETFs which are listed in Europe, we actually have on the platform.
Okay.
We have derivatives also, a platform. And then we have, so in the ETF universe, because you asked about certain partners, you can buy ETFs from all issuers from us.
Okay.
But we do have certain partnerships where we have a partnership, also sponsored partnership, where we advertise the products in a certain way, where the products are even a bit cheaper, tradable on our platform, where we put them in special offers. And there we have a partnership with iShares from BlackRock. We have a partnership with Invesco, and we have a partnership with Xtracker from DWS.
Okay. And you earn retrocessions?
From those,
or it's secret sauce? It's secret sauce.
No. We are very public about this. So, as I said, you can buy the funds and ETFs from everyone. It's your own choice. But if you buy an ETF from one of these prime partners, we have a marketing budget from them. Yeah, so we get a quarterly budgets from them. So that's part how we basically pay for the platform, and also how we keep the training costs so low. That's one element of it, among others.
Okay, and you said so you have a lot of tech people working on the platform. You also integrate service providers. I'm thinking of Forceline for the identification of your clients. Tell me if I'm wrong.
No, that's right. For international clients, we use, so in France and in Italy and Spain, we use Forceline. In Germany, we use the Deutsche Post. They have an online service for this as well.
Yeah.
Because every country is also a bit different. In Germany, you have to use video identification. So I actually have to do a real video with an agent.
I know.
And in other countries, you can do a database check.
Yeah, and in Germany, you have a very few providers. You have ID Now, I guess. I mean,
ID Now, exactly. That's one of the big ones, and Deutsche Post, and
not a few, if I remember.
I don't know. I think the 2 or 3 are actually making up most of the market there. Yeah.
And do you have other integrations like this, like, I don't know, risk scoring tools or any other kind of tools like AML checks automated via, I don't know, I'm thinking of solutions like Comply Advantage, things like this?
Yeah, AML checks we do ourselves. Obviously, I mean, in the background tech stack, we have lots of integrations. Yeah, we work with Salesforce. The entire platform runs on AWS from Amazon. So numerous players. But if you're asking directly fintech or finance related, so KYC, we mentioned Forceline. Now that's most of the end user front end finance stuff we actually build ourselves. Yeah.
Wow, cool. Amazing. Yeah. And you didn't talk about, we talked about equities, ETFs. We didn't talk about crypto because you work with CoinShares and 21 Shares. That's correct? Yes. So you propose ETPs.
Yeah, if you want to buy, so you can get access or exposure to crypto price moves, but we do it via ETPs. Yeah, so basically, pretty much, I mean, you named a couple of also partnerships that we have, but you can also buy the ETPs from all ETP companies who list their crypto ETPs on the German stock exchange. Yeah, so it's everyone who lists there can be bought. Yeah,
same kind of relationship that you have with Invesco, iShares, and Xtrackers, as you explained.
Exactly. Okay. Same kind of relationship.
Okay, interesting. So you said a few minutes ago that you had recently expanded in Europe in the different countries, like in the Netherlands, Italy, Spain, or Austria. How did it happen, and why did you decide those countries? And not Luxembourg, for instance.
Not Luxembourg. Luxembourg is next. So I'll answer the why and how we went about it. So the why is we think there is room for a pan-European digital investment platform. Let's call it a pan-European digital Charles Schwab. Yeah, like the big guys in the biggest brokerage business in the US. Yeah, or investment platform. And why is the time now perfect? Because this has been tried a couple of times, and usually the market, especially for brokerage and wealth management, is very local. Yeah, obviously we have some of the bigger banks, but mostly it's local players who are dominant in each market. Yeah, especially if you look at the online brokerage business. And now, I mean, so let me talk what's hard and what's our competitive edge. So one is, what's hard is, obviously, if you go into a new country, you have to completely build up the brand again. Yeah, because in Germany, as I said, a lot of people know us already. We have been around for years now, and that's where most of our clients are. In France, people who follow the startup and venture capital and fintech scene, they probably know us, but most people don't know us in France. Yeah, they don't know us, they haven't heard about us. So there is a lot of investments going, obviously, into building the brand. So that's costly. On the other hand, we have two advantages. One, everything is built on a new technology platform, so it feels just much more slicker, much more modern than the traditional incumbent players. And secondly, the price is cheaper. Yeah, a trade doesn't cost 10 euros anymore. Usually, that's the price of an online broker. It costs, as I said, it costs 1 euros. Yeah, or we even have a monthly subscription fee, 3 euros per month, and then you can do all the trading you want. All these savings plans, stock savings plans, ETF savings plans, all crypto savings plans, you can do this all within these is 3 euros. And that doesn't exist in most countries yet. Yeah. So we also attack on the pricing front. So, and why did we choose the countries? It's quite obvious. So if you go outside of Germany, you go for the bigger, wealthier countries first. Yeah. So that's after Germany, that's France, and then Italy, and then Spain. Netherlands is smaller than those countries. Yeah, I think it just has 16, 17, 18, 19 million probably. So much smaller, but also quite a wealthy country. And then you go into other markets. Yeah, okay. But so you wouldn't go into Portugal immediately. You would first go into France and Italy. Okay. Yeah.
And is it complicated because you have to consider local regulations and like I'm thinking of MiFID or AML? And is it complicated for your platform to adapt to these local?
The interesting thing is, I mean, regulation is always complicated and you have to be very careful and very, very prudent to comply to it. But we have to do this anyhow. So that wasn't actually the big difference, because we are in Germany, everywhere in Europe, you're under the MiFID rule. So that wasn't the problem actually. So, and also the passporting of our license into other countries, that was quite straightforward. And then you have the obvious thing, obviously the language. Yeah, so you have to accustom everything to that, and you have to hire special teams who speak the language. But the biggest hurdle is tax, I would say, because you need specialized tax reportings for every country, and sometimes also just culture. Yeah, because every investment culture is differently. Yeah, I mean, obviously, we now just talked about Europe. You know, you look to the US, there, half of the households in the US are invested in one form or another. Yeah, sometimes directly, sometimes via their 401ks. They are invested in the stock market. Yeah, half, 50%. In Europe, we are far, far from it. In most countries, it's like 10%. Yeah, that's where you are. And then you have countries like Germany, but also France is very insurance heavy. So if people invest, sometimes they invest via insurance products and not directly.
That's true.
In via brokerage accounts. So there's a lot of education you have to do. It's some cultural old dependencies, so to speak. So it is some work, but we think it's worthwhile. And
Okay, we don't have a lot of time left. We're already above 5 minutes.
So I have to. You're saying in a nice way. I have to shorten my answers and hurry up.
No, we have 10 minutes left. So you have a very interesting capital. You've been doing different rounds. Can you explain to us how it went in a nutshell, your different rounds, founding rounds?
Yeah. So we start the very first round, seed round or even pre-seed, when we just had the idea and the team, nothing else, and the pitch deck. That was done with classic business angels and friends and our former colleagues from Goldman Sachs. Yeah, so those were really individual people who gave us money. There we raised quite a lot actually. We raised almost 1 million. Yeah, we wanted to raise 500,000, but apparently we asked the right persons and the rather rich people. Yeah, so 1 million in total. And then shortly after that, we had our first professional venture capital investment from Holzbring Ventures, or HV Capital, they are called these days. So it's they're German, but one of the bigger tech investors here in Germany. And another Entangelman Ventures, another venture firm from Germany. And then a year later, we were contacted by BlackRock, actually. Yeah, so the very big guys. And that got serious very quickly because BlackRock was interested in basically they liked our technology, and they weren't so much interested actually in the B2C business. They were more interested in actually taking our technology and selling this technology to their clients. Yeah, so adding a B2B product on top of it. Yeah, and that's also what we did and what we're doing these days. Yeah, on top of the brokerage and wealth management, we also do these B2B deals. Yeah, and after they came in, that was obviously a complete game changer. Yeah, because it's the biggest wealth manager in the world, and we did 2 or even 3 funding rounds with them. And then the latest funding round last year, a new investor came in. One is a specialized fintech investor, and the other one is Tencent. Yeah,
Okay.
so the biggest Chinese company. So we have now everyone, like from the biggest wealth manager in the US to the biggest company in China, is really like across the globe.
Wow. And in total, how much does it represent?
Yeah, in total we raised 260 million euros.
Okay.
In total. Yeah, so a little bit over $1 billion in euro, $1 billion euros. And yeah, in terms of the cap table, it's roughly I would say 2/3 is investors and angels and those investors, and the third is for the founders and the employees, because they also have shares in the company.
And what are your next steps?
Our next steps, we want to be successful in Europe. So we've just launched it this year, but that's one. And another step is, that's not something immediate. So it's not something we're planning right now to do, I don't know, next year or so, but it's certainly something maybe, I don't know, 4 or 5 years from now is, I think it would be really cool to be a public company ourselves. Because we talk so much about the stock market and how great it is, and it also forces you to be very transparent and open, and doing an IPO at a certain stage. I think that would be really one of my dreams. But it's still a lot of work till then.
I can imagine. Erik, I always conclude with a recommendation of a book or a podcast that you regularly listen.
I think really one of the best and funniest commentators in the financial world is Matt Levine from Bloomberg. So he has a newsletter. You have to Google that. So Matt, M-E-T-T, Levine, Levin, Levine. Yeah,
that's great. I follow him.
And his newsletter is called Money Stuff. And I think he's one of the best commentators he also gives podcasts. He sometimes is on the own Bloomberg podcast. It's called Odd Lots. But this newsletter is really, I don't manage to read it every day because it's quite long. He writes really long newsletters. Every day he writes one.
Wow.
I don't manage to read it every day, but he always gets right to the point, and it's written in a very, very funny style. So check it out for yourselves. But I think Matt Levine is really one of the best in the industry there.
Thank you very much, Erik. That was very interesting, and thank you. That was very transparent either. Congrats.
Cool. Yeah. Thank you. Thank you, Celine.
Thank you all for listening and sharing this moment with us. Don't hesitate to contact me on Twitter or LinkedIn to share your comments and reactions. You can also rate this episode on your favorite podcast platform. See you soon.